All right, everybody, welcome back to Talk Tickers, where we break down the most important earnings calls so you don't have to. And today, we're diving into Winnebago Industries Q2 2025 report.
Talk a lot.
Yeah, there's a lot to unpack here.
A lot going on.
Absolutely.
I think, kind of the headline is, profitability improved sequentially, driven by improvements in the towable and motorhome segments through operating efficiencies, pricing strategies, and cost management. But the overall sales environment remains challenging due to soft retail and macroeconomic uncertainty.
Yeah, I mean, just listening to you say that, I'm like, okay, so they're doing things right internally, but the market is not exactly cooperating with them right now.
Yeah, there's only so much you can control, right? And that's one of the big things that Winnebago is dealing with is that they can cut costs, they can price strategically, they can make sure that their operations are lean. But at the end of the day, if people aren't buying RVs, they're not buying RVs.
Right. And they even adjusted the EPS guidance for fiscal year 2025 down to a range of 2.75 to 3.75 per diluted share. And then consolidated revenue now expected to be between $2.8 billion and $3 billion.
Yeah, I mean, that's a pretty clear signal that they're tempering expectations a little bit. I mean, it's understandable when you consider consumer confidence and just the overall sentiment out there. It's been a bit shaky.
Yeah, I mean, that makes sense. And it seems like, we'll get into the specifics, but it's like they're saying that they're expecting this retail rebound to happen, but it's just going to be maybe a little bit later in the year than they had originally anticipated.
Yeah, the timing is always tricky to predict with these things, right? Like when is the consumer really going to come back in full force?
Yeah, absolutely. All right, well, let's break this whole thing down, starting with their motorhome RV segment. And it seems like Grand Design's new motorized division, I mean, they came out swinging, right?
They did. They really, they're coming in strong with the Lineage series. M-Class C, initial response has been fantastic. Highlights include the quality, the comfort, the handling, and just the attention to detail. I mean, it's pretty impressive what they've been able to put together.
Yeah. I mean, are they hitting all the right notes here? I mean, it seems like they're getting a good reception from both customers and dealers.
Yeah, it really does seem that way. And they've started shipping the Lineage Series F Super C coach now too, which is, another big step for them. And we can expect the Series VT Class B to follow later in Q3. So they're really building out that lineup.
So they're not just dipping their toes in the water, they're diving right in.
They are going all in.
And this Series F, I mean, it's got some impressive features. You were talking about the lithium batteries and solar power.
Oh, yeah. It's got the Lithionics lithium battery. It's got solar power. It's got Fox Racing suspension, a shore slide out. I mean, they're really packing it with features.
I mean, are they trying to make a statement here with this Series F?
I think so. I think they're trying to show that they can compete at the top level and that they're serious about this motorized segment.
I mean, and they're aiming for $100 million plus in revenue this year for the entire Lineage brand.
That's the target. And, from what we're seeing so far, it seems like they're on track to hit that.
Yeah. And that's just one piece of the motorhome puzzle, right? Because then you've got Newmar, who's been kind of the king of the premium space for a while now.
Newmar, yeah, they're continuing to show why they're the leader in the premium motorhome RV category. I mean, the Dutch Star has been the top Class A diesel model for 3 years running. I mean, that's dominance right there.
So 3 years running, and they're continuing to grab more market share. I mean, what are they doing right? I mean, is this just kind of like the gold standard that everyone else is chasing?
I think it's a combination of things. They have a reputation for quality. They have a really loyal customer base, and they're also embracing technology in a really smart way.
Yeah, they were talking about this 3D product development they've been doing.
Right. That's just helping them reduce time to market, get new models out faster. And a good example of that is the Super C Grand Star that they launched.
Okay. And I know we were talking about this before we started recording, but they've got this new refresh of the Super C lineup coming for 2026.
Oh, yeah. They announced it at their recent dealer meeting, and it's pretty impressive. I mean, the all-new Summit Air, built on a Freightliner Cascadia chassis with a DD16 600 horsepower engine, up to 30,000 pounds of towing capacity. I mean, it's a beast.
Okay, so are they just like flexing on the competition here, or is there a real strategy behind going this big and this powerful?
I think it's a little bit of both. They're definitely making a statement about their capabilities, but they're also responding to what their dealers are telling them. There's demand for these high-end, powerful RVs, and Newmar is delivering.
Now, what about the Winnebago motorhome brand itself? Are they just kind of like cruising along, or are they doing anything interesting?
They are doing some interesting things. So they have new senior executive leadership in place, and they've developed a revitalized multi-generational product plan. So they're really thinking about the future of the brand and how to appeal to a broader range of customers.
Okay, and are they seeing some success with this new approach?
I think it's still early days, but the expectation is that we'll start to see a turnaround in the second half of fiscal 2025 and into fiscal 2026. So they're playing the long game here.
So they're laying the groundwork now and hoping to reap the rewards down the line.
Exactly. And they're also working really closely with their dealer network to make sure that they're meeting their needs and that there's enthusiasm around the new products and pricing strategies.
Now, this whole thing with the three brands, Grand Design, Newmar, and Winnebago, I mean, it's kind of a three-headed monster here, the motorhome segment, but is that a good thing or is that too much to juggle?
It's a bold strategy, right? But I think the logic behind it is sound. By having these three distinct brands, they can really cater to different segments of the market and reduce their reliance on any one particular segment.
So it's like a diversification play almost.
Exactly. And it also gives them the opportunity to command different price points and really maximize their margin potential across the entire motorhome business.
All right, so moving on to the towable RV segment, it sounds like there are some big changes afoot there too, especially with Don Clark now at the helm.
Yeah, Winnebago Towables is going through a major strategic transformation under Don Clark's leadership, and they're consolidating their expertise in northern Indiana, which is, kind of the heart of RV country.
Okay, and what exactly are they doing to shake things up over there?
Well, they're essentially resetting the entire Winnebago brand Towables portfolio with a new pricing strategy, stronger dealer relationships, and a new product strategy. And from what I'm hearing, there's a lot of excitement among dealers about these changes.
I mean, are these changes designed to kind of course correct, or is it more about like just taking advantage of a new opportunity?
It's a little bit of both. I think, they recognize that they need to be more competitive in the towable segment, and they're also seeing an opportunity to really expand their market share by meeting the evolving needs of customers.
Okay, so they're not just trying to hold on to what they have, they're trying to grow the pie.
That's right. They're playing offense.
So how does Grand Design fit into all of this? I mean, they've been a powerhouse in the towable segment for a while now.
Right. So the idea is to create this really powerful 1-2 punch with Grand Design and the revitalized Winnebago brand so they can really attack the towable market from different angles and appeal to a broader range of customers.
Okay, so they're not trying to make these two brands compete with each other. They're trying to make them complement each other.
Exactly. They each have their own strengths and they can leverage those strengths to gain a bigger share of the overall market.
Let's shift gears and talk about the marine segment now, because it seems like Barletta is really making waves, no pun intended.
No pun intended, but they're doing incredibly well. Their market share increased by 140 basis points to 9.5% for the 12 months ending February 2025, and that makes them the fastest growing U.S. aluminum pontoon brand out there.
Okay, so what's the secret sauce here? I mean, what are they doing that other pontoon brands aren't doing?
Well, I think it's a combination of factors. They're really focused on the customer experience. They're building high-quality boats that perform well, and they're also managing their inventory really effectively, which is crucial in this market.
And what about Chris Craft? I mean, they're kind of a legend in the boating world. Are they still holding their own?
They are. They recently received a Customer Satisfaction Index Award and innovation recognition for their new Sportster 28, which blends classic design, premium performance, and affordability, which is kind of a sweet spot in the market right now.
Okay, so they're not just resting on their laurels. They're innovating and trying to appeal to a wider range of customers.
That's right. And they're also expanding their offerings in the premium segment. They recently unveiled the Catalina 31, which is a redesigned center console luxury day boat at the Palm Beach Boat Show. So they're definitely not standing still.
Okay, well, let's zoom out a bit and talk about the overall market outlook. Winnebago seems to be a little bit more cautious than the RV Industry Association when it comes to their forecast for wholesale RV shipments for the rest of the year.
Yeah, for calendar year 2025, Winnebago is forecasting wholesale RV shipments of 320,000 to 350,000 units, which is slightly below the RVIA's forecast. And I think that reflects their more conservative approach given the current state of the retail market and just the overall economic uncertainty.
So are they just being overly cautious, or is there a real reason to be concerned about the health of the RV market right now?
I think it's a bit of both. They want to be realistic about the challenges, but they also want to make sure that they're not overextending themselves.
And they were talking about how dealers are expected to prioritize leaner inventory levels going forward.
Right, and that makes sense given the higher carrying costs associated with holding inventory right now. I mean, interest rates are higher, so it's more expensive to finance that inventory.
So it sounds like there's this delicate balance between, wanting to have enough inventory to meet demand, but also not wanting to get stuck with a bunch of unsold units.
Exactly. And that's why you're seeing dealers being really cautious about how much inventory they're taking on.
Okay, so despite all of this uncertainty and the headwinds facing the RV market, Winnebago is still doing pretty well in their core towable and motorhome price points.
That's right. They're performing well in those core areas. In motorhomes, they've actually gained retail share in Class A diesel and Class C models. And in towables, their affordability moves seem to be stabilizing their market share in a really competitive environment.
So it seems like they're kind of weathering the storm better than some of their competitors.
Yeah, they're holding their own, and they're also laser focused on maintaining profitability, even if that means not going after market share at all costs.
So they're not willing to sacrifice their bottom line just to sell a few more units.
Exactly. They're playing the long game.
Okay, so we've talked about the market outlook. We've talked about the performance of the different segments. Now let's talk about some of the broader economic trends that are impacting Winnebago and really the entire RV industry.
Yeah, I mean, there's a lot of uncertainty out there right now, particularly when it comes to trade policy and how that might impact their business.
Yeah, I mean, tariffs are a big concern for a lot of companies these days, and Winnebago's no exception.
Right, and they're also keeping a close eye on consumer confidence levels and how consumers are feeling about the economy and, potential future interest rate movements, because those things have a direct impact on demand for discretionary products like RVs and boats.
I mean, people aren't going to be rushing out to buy a new RV if they're worried about losing their job or if they think interest rates are going to skyrocket.
Right. It's all about that consumer confidence and how comfortable people feel about making those big purchases.
And then, of course, there's inflation, which is impacting everyone these days and could be exacerbated by any potential changes to tariff policy.
Yeah. Inflation is definitely a wild card right now. It's hard to predict how it's going to play out and how it might impact their costs and ultimately their pricing.
Now, Winnebago specifically mentioned that the upcoming selling season from April through July will be really crucial in terms of gauging the true strength of retail demand and overall consumer confidence.
Yeah, that's going to be a key period to watch. I mean, those are the prime months for RV sales, so it'll be interesting to see how things play out.
Now, what about dealer inventory levels out in the field? Is there a glut of RVs sitting on lots, or are things relatively balanced?
Well, it seems like dealers are continuing to be pretty disciplined about managing their inventory. They're focused on clearing out any older model year inventory before taking on a lot of new models, and I think that makes sense given the current environment.
So they're not just blindly ordering new units, they're being strategic about it.
Exactly. They're taking a cautious approach.
And it sounds like the inventory situation is a little bit different between the motorized and towable segments.
Yeah, there's a general sense that motorized RV field inventory is maybe a little bit elevated in some areas, and there's some aging inventory, which is making dealers a bit cautious. But towable inventory seems to be in a better position overall.
So are they going to have to offer bigger discounts to move those older motorized units?
It's possible, if they want to clear out that inventory, they might have to get a little bit more aggressive with their pricing.
We've talked a lot about the potential impact of tariffs, but Winnebago is also actively trying to mitigate those impacts.
They're working with suppliers to explore alternative sourcing options. They're doing risk assessments, and they're even looking at potential price adjustments if necessary.
So they're not just sitting back and hoping for the best. They're being proactive.
Right. They're trying to get ahead of it.
All right, let's dig into some of the financial highlights from the quarter, starting with the towable RV segment, where they saw an increase in volume, but it was driven by a greater share of those lower-priced units.
Yeah, so their towable RV volume did increase year over year, but a bigger chunk of those sales came from the more affordable models, which put some downward pressure on their gross margin.
So are they making less profit per unit on those lower-priced models?
Generally, yes, although their gross margin did improve sequentially from the previous quarter thanks to lower allowances and discounts.
So are they offering fewer incentives to buyers now?
It seems that way, and that's probably a reflection of the tighter inventory situation that we were talking about earlier.
Okay, and their adjusted EBITDA also declined year over year, but increased sequentially again due to those lower allowances and discounts as well as lower SG&A expenses.
Right. So it's a similar story there. They're managing their costs effectively, but they're also seeing the impact of that shift in product mix towards those lower priced units.
The marine segment, on the other hand, was a bright spot for them financially, with both revenues and adjusted EBITDA increasing year over year.
Yeah, that's right. And that was driven by a combination of higher unit volume targeted price increases and improved operational efficiencies. So they're firing on all cylinders over there.
Okay, and overall their balance sheet seems to be in pretty good shape.
Their balance sheet is solid. They have net debt to EBITDA ratio of 4 times, which is a little bit higher than their target range, but they're committed to bringing that down through working capital improvements. And they've also been actively repurchasing stock and paying dividends, so they're returning value to shareholders.
Yeah, they repurchased $20 million worth of stock in Q2, and they're paying a quarterly dividend of 34 cents per share in April, which will be their 43rd consecutive quarterly dividend. So they're definitely committed to rewarding their shareholders.
Yeah, they have a strong track record on that front.
Now, one thing that stood out to me was the increase in warranty expense, particularly in the towable segment. What's driving that?
Yeah, so part of that is due to their efforts to address some historical quality issues in the Winnebago brand. And they've also had some broader quality campaigns in the Grand Design brand. So they're taking steps to improve quality, which should hopefully lead to lower warranty costs in the long run.
Okay, so it's kind of a short-term pain for long-term gain situation.
Exactly.
All right, so stepping back and looking at this earnings call from an investor's perspective, what are your key takeaways?
I think the key takeaways are that Winnebago is navigating a challenging market environment. Effectively, they're controlling costs, they're pricing strategically, they're being disciplined about inventory, and they're investing in long-term growth initiatives. But the overall market remains uncertain, and that's reflected in their revised guidance.
Yeah, it seems like they're doing a lot of things right, but they're also being realistic about the headwinds they're facing.
Right. It's a balanced approach.
All right, well, now for the part of the show that everyone's been waiting for, it's time for our This Is Not Financial Advice segment, where we throw out a completely outrageous but plausible trade idea based on everything we've discussed today. What have you got for us?
Okay, so given Winnebago's cautious outlook on the RV market, but the positive momentum they're seeing in their marine segment, particularly with Barletta, I'm thinking maybe a long position in Winnebago paired with a short position in a competitor that's heavily focused on RVs and doesn't have a strong marine presence.
Okay, so you're essentially betting that Barletta's growth will help to offset any weakness in the RV market and that Winnebago will outperform a pure-play RV company.
Exactly. It's a speculative play for sure, but I think it's plausible given the dynamics we're seeing in the market.
Right. Right. Well, there you have it, folks. Our deep dive into the Winnebago Industries Q2 2025 earnings call. We've covered the key results, the strategic initiatives, and some potential market signals. What stood out to you from this deep dive? What are your thoughts on the evolving dynamics in the RV and marine industries? Remember, the This Is Not Financial Advice segment is just for fun and should not be taken as actual investment advice. Always do your own research and consult with a financial advisor before making any investment decisions. Join us next time on Talk Tickers as we break down another crucial earnings call to bring you the insights that matter.
See you next time.
Take care.
Bye.